The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Monday, June the 2nd edition of the Tiger Technicians Hour. Whew, sudden moves. We've been looking at the E-mini. It runs up all the way to the 59.17 area in the 10-minute chart, and then tanks from that level down to 58.70. I mean, we're talking about almost 50 points. Whoops. All right. Well, we're looking at something very interesting. So let me go through everything one at a time. First of all, I want to see if there was any Chapman trin gauge reading. No, nothing there. Okay, here we go. So there are patterns that we are looking at. There are a number of things that are unfolding right now that suggest at least some choppiness, and that the aspect of May's rally, where the technique that I use with the sort of M-shaped pattern in the 9-period exponential 914 moving average that I use as a medium in which to keep longer term positions. That means trying to hold as long as possible until it flips negative. And what I'm looking at here is this M-shaped pattern I should have done that with the blank chart. Maybe this is fine. You can see it. So there's a green 9-period moving average in this daily chart of the Dow, which pulled back and held beautifully on that sharp pullback 6 sessions ago, and then ran back up because it's like a spring. If the 9-period moving average doesn't go pink, going under the 14, it can act like a spring to the upside, and then you've got to use other techniques to say, okay, are we looking at something that says we've got residual, we've got upside weakness because the levels that would be resistance are showing themselves, and that's exactly what we're looking at here, because we've got a trend line, and the patterns that I always look at, let me just get to this because it's such an important week. We're looking at, here we go, patterns, pattern. I look at 3 core patterns in the market all the time. Straight line up, straight line down, that's 1. Cup formation, that's 2. Arch formation, that's 3. And a mix of 1 and 2 and 1 and 3. 1 and 3 is when you come down sharply and then you rally to, the price that you're following goes to a peak A or a B, and then it rolls over and makes this kind of H or inverted V-shaped pattern, takes out the left side low. That's a pattern. Now, there's the same thing that we're looking at that's inverted with the reverse Y, green, because if it takes out the left side high, it can go quite a bit higher. Just as when the left side low is taken out here, it can go quite a bit lower. So what I'm looking at here is there's a fight going on between what? Between the H pattern right there and Chapman falling axe, which has resistance, as well as the chance that if it breaks to the upside, then that cup formation continues. But if it rolls over, especially at a peak A or a B, you've got to, and I'll draw this in. I actually took it out because it was just too messy. But this is what I'd be looking at if the Dow, which made a low so far today of 41,853, goes to the A. I said to subscribers this morning that we're going to use right here. This is Chapman Wave automated. Support levels 41,896. We've just gone underneath that. The next one's 41,473. It's Chapman Wave automated support levels. But it's the pattern that's really important. Now, here's another thing. So I'm going to take a little time now because the first day of the month, first day of the week. I love when Friday is the week's close because that just makes it so clean. That's number 1. Number 2 is I like to look at this pattern. Now, I discussed this with my subscribers over the weekend, and I said, everything about this suggests that we've made an internal high right here, and that was at is a Dow chart. I used this chart, Chapman Wave Dark News Index, DNI, using the Dow daily chart, and the high that was made on the 19th of May at 42,842, that seems to me like a very good chance that it made an internal high, and we're looking in this area that we've made a residual high. And I said I had to wait for the close on Friday. Well, we got the close, and then I did my show, and I said I need to do a little bit more work over the weekend just to kind of make sure that this little white horizontal, this little line right here, this rectangle, which I always put in, it's usually interest rate related, but for quite a while now, it's been other things that have been very important. And in this particular instance, it's a kind of combination, because I think the rates are an issue. The more I look at the rates, the greater the chances are that if they don't start coming down right now, it could start to impact the market. Okay? So this is a really good chance that we've made an internal high. I have to wait, but I think we might be making a residual high. And look, the pattern's the same day. Internal high, residual high. Internal high, residual high. Slightly higher, but that's okay. And that's a pattern that I like to follow. Now, what's really important about this, let's get out of that, is I want to just finish all the indices just to show you that it wasn't based just on kind of emotion or anything like that. The reason why, let me just go to the S&P next, the S&P. The reason why I'm a little concerned here is that, yes, the MACD turned down in the S&P daily chart. The relative strength index is gone. It's arched over. It's a little bit weak. Stochastic is quite weak at 76%. The relative strength is starting, the on-balance volume is starting to pull back. But most importantly, it's the same pattern. But this is a little bit stronger than the Dow, in the sense that it's not quite as a volatile chart as the Dow. And the 9-period moving average is still quite a bit above the 14-period moving average. So, yes, we did start a short position, small short position, an aggressive small position, but small, yesterday. And we did add a trading position this morning. And it's one of those things where, you know, I said it on Friday, when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. I'm quite concerned about this phase right now. I'm talking about the next 12 hours of market. So today, going into tomorrow, maybe at this time. Why? Because the dark news index is one thing, but bad news, the market is not, at this particular point, the market is not seeing the kind of bad news. It isn't the Dow. You're down 300 points. That's kind of a little bit there, but I would say 560 points in the Dow down, S&P down 68 points to 70 points. And now I'm starting to see the market respond to something that is there that it perceives as bad news. Right now, excuse me, right now it's there, but not enough. So I've been a little bit cautious, and in fact, I couldn't tell you how many times I thought about it, whether we should add to the short position, but I treated it as a trading position, this one that we added, with about a 1% risk on a 3 times long. I mean, really, you can't get tighter than that. And what I wanted to see, and we've seen exactly what I wanted this morning, was some kind of institutional follow-through buying to buoy the market, and then slowly over the day to see it fade, and then have a lousy day tomorrow, and then we start to hear about what could be the bad news that the market doesn't like. We haven't got there yet. This is just a work in progress, but we'll see what happens. I'll be right back. The Dow has come back a little bit. It's down 317. S&P is down 48.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. Basil Chapman. This is Monday, the June the 2nd edition. We're looking at the Dow down 314, S&P's down, what is that, 69? There, 69. So a couple of things. So I'm just going through step by step what I want to look at before I forget, because I want to do this on Friday and I completely forgot. So VT. VT is the Vanguard Total World Stock ETF. U.S. stocks about 49%. Leg E on the monthly chart with the close on Friday, close on Wednesday, Thursday, Friday. No, Wednesday, it was Thursday that it made a new all-time high of 124.10. So that becomes, there's no other way I can count it, but as a peak A, a leg A. I'm sorry, if that makes a new high this week, it continues leg A. If it doesn't, it goes to a peak A. A, in a Vanguard Total World Stock ETF, I mean, really, that's amazing, right? I'll talk about it further, but I just want you to impart to you the fact that it's the V-shaped pattern, but there's a chance that the 123.64 high of 2024, the 123.98, 34 cents higher than that high, back in, when was that? That was February? Yeah, February, the week of the 21st of Feb. Cup formation pulls back down to that 100.89 level, the week of April, the week of April the 4th, right in the 200-period moving average, and it comes all the way back. That's that fantastic V-shaped pattern. I can't call this anything else but a new leg A. It could fail, but it has to fail by going under 100.89. I just don't see that right now. So that's a really big positive thing. Shorter term, you've got this double top, 124, a round number high, back around about the 19th of May, pulls back to the 14-period moving average, and then goes to 124.10. But it doesn't close there. So, and it's still holding really well. It's only down 31 cents at 123.06 right now. But there's a chance, based on the technicals that I'm looking at, that if this week, it can't be next week, I'd like it to be sooner rather than later, if it tags the low of the 23rd of May at 121. 121 round number low. So it made a 124 round number high. And 4 days later, it makes a 121 round number low. So those are numbers that are really important. Close above 124, a close above it by about 50 cents would be very positive, and a close below this around 121 round number low by 50 cents would be would be negative, saying you're arching over. Then I was asked a moment ago about Disney. Disney made 118.63 high, not all-time high. We can forget about that. That's way back. That's at a 203.02 in March of 2021. In the interim period, it's gone down to 78. Well, it made 118.63 high the week of, this is going to be last year in December the 6th. And then it comes down to the 14-period moving average, under the 200-period moving average, spikes quickly to the 118.59 level, just a tad, 4 cents below the previous high. That was on the 27th, on the 7th, I'm sorry. And then what does it do? It pulls back sharply to 80, and now it's rallying, and it's just done about 3 or 4 highs right within 50 cents, like 113.41 on the 14th of May, 113.44 on the 16th of May, pulls back to the 9-period moving average, and today the high is 113.60. So all of these are suggesting if there's a break to the upside, that's going to be very positive, but that break needs to really snap through the double top potential. But it also says right here you could be getting some kind of shakiness. Now, if you're looking at the monthly chart of Disney, the MACD has been very strong. The stochastic is weak at 60%. The on-balance volume is very weak, but that 9-period moving average on all the pullbacks has held green, and that's a positive. So the question was, is this a time to start a position in Disney? And my answer is, the way Disney has gapped up and held these above the gaps, it did tag it just, no, it didn't. It actually, look at this, the low of the gap day on the 12th was 108.66, and on the 23rd, the low is 108.78. It hasn't even taken that out yet. So my answer is, because this looks like a longer-term position that does really show the momentum in the weekly chart as being 87% in the stochastic, on-balance volume is not that great. MACD is good. 9-period over the 14 is over it's over the 200-period moving average of 108.41. What I'm going to say is, this is very difficult, because looking at all these gaps and looking at the general economy and the way that people are looking at the economy, you would say, are people really going to flock to Disney? Well, the chart is saying that it's done extremely well. It's exploded to the upside. It was stuck in the 90 to 80 area for ages, and then boom, suddenly it spikes up and it says goodbye to that area. I'm going to do something that I initially thought, nah. I'm going to say, look, you are a long-term, you like to buy and hold, the questioner. And I'm going to suggest start a position at 112.92. You know your parameters. If it closes under, now, because I'm just saying start, I'm going to make the stop a little bit wider. And the stop is 108.78. Let's make it 108. So that's a 5-point it's about a 5% on a starter position. But let's just follow this, even over the intra-week, we could just follow it. But get your foot in the door for one reason. If there's any strength at all in this market, even now, look, they're trying to hammer the market, and it keeps wanting to come back. I haven't got this bad news signal that says, hey, you can go short anything you want because we are going down and we're going down sharp. No, that's number one. Number two is, there were so many people all of a sudden from Friday through this morning. I'm reading about people saying this market's vulnerable. It's going to go down. Some people have said it's going down very sharply and for quite a while. And I'm saying to myself, hey, wait a minute, where were these people before? Well, one or two maybe have been, I've seen them before and they've been pretty accurate, so I have to respect that. But I don't like this sudden agreeing with me that we've got a digestive phase going on. And that's the reason why I said I've got it on a purely technical basis. I've got to have this trading position. I want it because we've got the other one quite nicely. Let's at least give it a chance. But I don't have the signals to say that we've broken down and we're breaking down. So I just needed to clarify that. So I'm saying, look, we might even be surprised in this particular phase that it's sideways. It's not actually down, it's sideways more than anything else. So I'm saying foot in the door at 112.89. Don't get carried away, because I would say to you, we would like to add in the 115s if it gets there, because that would say it's going to test the 118.63, 118.59 double top that we were talking about. And if it starts to slide, we know what to do. You can just we'll manage a little bit position. I'm saying you can manage that position. No, we just broke another. Okay. Now I need just to quickly do this. The gold is up 82. It's right at the precipice of this Chapman Wave inside track repellent zone. But look at silver. Silver is up $1.41 at 34.44. I'll talk about that when we reach here.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So if you're looking at physical gold, that's what we have for subscribers for quite some time, 2370, 2573, and 2576. So it's got to leg D. Right in there, just as the gold chart has Chapman Wave inside track repellent zone. Let me just draw this in right here. So it's an expanding falling axe formation, expanding wedge, and you can see it right here in the weekly chart as well. This is so far very good action, and part of it, of course, Tommy was talking about it earlier on, is the weakness in the dollar. So that helps, of course. The direct correlation hasn't been 100% all year. It not percentage-wise. In other words, the amount that the dollar pulls back isn't the amount that percentage that you go up in gold, but the directions are inverse, unlike a little bit like a Bach fugue, where you get these counterpoint moves. What we're looking at right now is that physical gold is acting very well. The stochastic is still only at 72%. It has room to go to 80%, and the on-balance volume is a little bit weak. The MACD only just the last today, in fact, crossed positive again. The gray line is the relative strength index. It's doing very nicely, but it's not great. It's just doing okay. The 9-period moving average is good. So this suggests that we could see some more upside action. But what we do in the falling axe formation is if you take out the left side high, then you immediately look at the next one on the upside, and that would be the one on the 6th of May. That's physical gold of 25 point, if I can read the darn thing, because I always make it gray, 96. 26.17. And then you get 26.36, and then it breaks out to new highs. So this is going to be very important. And then look at silver. Silver, a big move up, huge candle, peak C1, C2 in the rectangle formation. Now you've broken above it. That's really good. Helping the weekly chart for the first time actually look pretty decent instead of just sideways. Then I got a question here. No, it wasn't a question. It was a statement. Metals. You're missing. It should be UR with the apostrophe U and then apostrophe RE, not your. Missing the precious metals move. Silver's up 4%, but actually it's 100% correct, because it should say, just like it was written incorrectly, you're missing the precious metals move. Silver's up 4% with a question mark. No, we're in it. We have silver. We have a silver stock in the 7s, and it's trading right now at $8.70. We're doing in leg E. And this actually turns out to be a potential. I don't say it will, but a potential instant restart, because if you go within 3 bars above peak D, you can automatically put in the circles and say, hey, you could have a whole brand new buy mode here, but we go one step at a time. Leg C in the weekly chart, and this is what I had for core mining. CDE is the symbol. That one step at a time, I've got it going until July to get to this particular level right here, the candle of a year ago, 3 years ago, 4 years ago, July of 2021, the high of 923. So that's our target for July, but we might do it in June. I don't know. But look, that's it. And there's your Chapman Wave inside wedge target resistance line. Everything's in place, looking very nice. Here we go. So that's the technique that I use, and for our entry point in the 7s, and now it's trading very nicely. Core CDE is the symbol. I like for subscribers to have low price stocks. That's not got anything to do with inexpensive or expensive. It's just low priced, and that has the potential to have really nice percentage gains. Today's gain is 8.11%, but that day is young. Anything can happen. So thank you for that. But we are in it, and we're in the gold. So we're not missing out on the precious metals. We are there. So talking about metals and in the metal area. So MP, a question came in. Could I look at MP? That is MP Materials Core. There's a rare earth mining monthly chart. It's sort of struggling. It improved a lot, but it hasn't so far it's not great. And then this went in the weekly chart to a peak C and then pulled back. I couldn't call this anything else but a peak C. So it'll be negated if it goes underneath the January low of 1556, and it's trading right now at 21.25. It spiked to the upside today, 22.87, and now it's only up 21.22. It's down 57 cents. I just think that this is very specialized, and that's what I've been saying to subscribers. I'm doing my absolute best for subscribers, and so far it's worked out pretty well. To go only with what's working, either on the downside or the upside, because I don't want to sit there waiting in this particular phase of the market right now. If something is in an area that is attractive, but it is a leader or it is really working well, that's what I want, because I don't want to wait around. There isn't time to wait around. So this MP is waiting around. So all I can say is stuck to the 200-period moving average of 21.83. It's trading right now at 21.23. If MP Materials Core actually trades, it can't just go there once. If it trades in the 24.50 area, well, I mean, it's over 3 points higher. So what do you do? If it trades there, then I'm saying to you, now we've got some strength. Right now, even today's pop must have been news-related, and now it's giving it back. So what I'm going to say to you is the low of MP is the symbol of 1864 on the 28th of May with a round number 19 close, says to me that there is buying coming in, but it's a work in progress. So what I would do is this: if you aren't in this, I think it's in an area that has potential to move to the upside. Personally, I would rather buy strength than weakness at this particular point. But you asked me the question, and I'm just going to say to you, if it can take out today's high of 22.87, I would start a position. That's over a point higher, but that's just the way it is, because I don't want to be buying something that cannot hold a gain. Nice gain Friday, goes to a higher high, and it's given back some of it. But if you have done your homework and you really do like Rare Earth Minerals, MP Materials Corporation, MP is the symbol, then start a position. This is different to Disney, which has proved itself to have strength. This is not yet proved to have strength that it can hold. It has had strength, but not that it can hold. So I'm just saying, start a small position at 21.23. I would not give it more than 1 1/4 points, small position, and I'd still have a 5% risk as a stop. I hope that helps. You will look at it again tomorrow if you want, but right now. Next question. Oh my, we're slipping along here. Wait, a question came in earlier on, and I wanted to get to it. AGEN. AGEN is something or other. Agamon, something like this. They do it in gray. I can't read it, but it's making this potential retest of the 399 area. Is at 391. I like the action. I'll be back. We'll talk more about it.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I'm just trying to find a left side, right side price time match to the symbol AGEN. I finally figured out what it is. It's called Agenus Inc. Immuno-Oncology area. So let's just get this left side, right side price time match. I like to go to the lowest low. You can't in this particular case, or you could, but I'm just going to say, okay, so that now I can extend it. Good. Okay, so now, so what I would normally look, if you go to that level for the high that was made back on the 22nd of January at 415, it's trading right now 395. It extends out a little too far. I like to go to the certain candles. This candle didn't work. I'm going to go to that. That candle is still... Yeah, I'm going to go to this candle. I might be late, but it doesn't matter. So there we go. So left side, right side price time match, not with the plumb line. The plumb line is slightly off, but it has definitely... it's this today, huh? That's still a little too aggressive. All right, I'm going to go to that low right there. There we go. And as I say, I love this when it's arithmetic. It's a mathematical formula where you got the left side number of bars is exactly equal to the right side number of bars, and you've picked the low or picked the high that it's going to go back to. But in this particular instance, I have to use other techniques that I've developed over the years, and it says by the 6th of June. Oh, that's not too bad. 6th of June, and that'll be on a Friday. By Friday, there's a really good chance that this tags this area, but I have to confirm it with the Chapman wave inside wedge target resistance line right there. Okay, yes. So I would say that's the way I'm looking at it. I hope that helps you. Here we go, make that there and that there. And it says that you should go not to peak C1, C2, just underneath 4.06, but the way it's acting right now, the way the 9-period moving average was still green when you plunged way below it, says that there's just enough room to go to 407 or slightly higher to go to a leg D. So I'm looking at this positively. I'm going to just change this because that's the technique that I like to use right here. So when it goes through a whole bunch of other price points, I tend to do something else. I tend to look at it and say, okay, that's a little aggressive in terms of the way the price was aggressively going through the trendline resistance. But if I did it from here, I need confirmation. That's the last trough of importance right there. So that's it. Okay. Yeah, I feel that there's a real good chance that by the end of the week we'll just have tagged. But what I am looking at here, based on the stochastic and based on the relative strength, the gray relative strength index, and the MACD being a little weak until the MACD crosses positive. I would not be surprised if there's one little pop to 407, maybe 406 for peak C1, C2. But then you digest, and I would say that the digestion should hold 353 to 349. That's kind of the way I'm looking at it. Very low price, 3.96, but it's in the biotech area. A lot of the biotechs have done pretty darn well. All right, a couple of things that I wanted to go through. What am I missing here? I know I've skipped something because I went out of order. So let me do this. I did that, all of those. Oh, I know what I'm missing. Bitcoin. Bitcoin is trading down 290 at 104,840. And I've talked about this. Yes, another double top potential, 110,945 back in late January. In early January, you go to late December, you go 110,180, and now you're at 113,006. This just says to me, that's the same thing that we were doing right now, left side, right side, in this big cup formation. I forgot to put that in. There's the cup for I drew it all, but I forgot that. Exactly to the bar of the left side that I chose, that peak D. So this just says, I think that Bitcoin is starting to weaken a little bit. I don't see a big plunge to the downside just yet, but it looks to me like if that 9-period moving average, which is still strong, but the price has been twice underneath it, under the 14-period moving average, the MACD is weak, stochastic is weak, on-balance volume is weak, relative strength is very weak. I think that Bitcoin, we have Bitcoin from way lower down. I think Bitcoin is becoming a little bit vulnerable in the short term, and there's the double top. Much nicer visuals than what I was showing just now in the weekly chart. And it's interesting because the monthly chart just squeaked to a leg E. So I think it's just due for a bit of a rest. We'll talk about that in a moment. I just want to do TLT. I'm talking about double tops, that is. TLT is down, so the TBT once again is up, and it's not up by much. Now, is it possible to go? We've got peak Cs in the daily and the weekly. The way it looks, it suggests that there should be a leg D. So maybe we do get an interest rate scare that was like the old days that I got the Chapman Wave Dark News Index, mostly because of the interest rate scare. At this point, it's other things. It's double tops, also the round numbers, and we're talking about that. But I'll come back to it in a moment to say that the TBT, which is the inverse of the ultra-short Lehman 20-year Treasury bond ETF, is really the interest rates that we're worried about, 37.51, up 40 cents. Let's just go to the 10-year TNX. So there, 10-year. Oh, I've got questions coming in. I better get to them. So this one, so it made a peak B, but then under it goes peak A, peak B, peak C, and this has gone to a D. So we're going to be watching this closely. So this, here's your starting point. Remember, from the lowest low, you start counting your waves, and it's every single peak gets enumerated alphabetically. A little contradiction. Dave White would have liked that. So peak C, peak D. Yeah. So this has already gone to a peak D. So this is saying, don't worry about interest rates just yet. That's just all it's saying. Okay, so I won't worry about that. I'll go to crude oil to say that it was up very sharply. It was up 2.07 at 62.85. It should be making a leg D. I'll start worrying a little bit about crude oil as a geopolitical issue. First of all, if it gets to 60, this is a continuous contract. If it gets to 65.14, then that 66.11 200-period moving average that it hit and then broke down from back in early April will become a target. And the weekly chart says, this is not a particularly good pattern. So maybe it's just a little spurt in the upside. Okay, next question I got. Let me just get to it again. Oh, FXI. This is the... made a peak F in the day. This is the iShares China Large Cap ETF. Look, it made a peak F. I haven't got a down arrow yet, but the 9-period moving average is really close to turning down. The MACD is weak. The on-balance volume is very weak. The stochastic is weak at 32%, and the relative strength index is weak. So the only thing that's holding this up is the 914, and that looks like it's very close to turning down. I think China right now is just under pressure, and you can see that in the weekly chart, it's not breaking down. It's just The upside now is a little bit limited, so it's just kind of stuck. So that's the FXI, Xpeng, XPNG. I think that was the one that we wanted to look at. Oh, man. XPEV. As we go to the break, XPEV is down 12 cents. Yeah, it made that peak. See, it's pulling back. Yeah, China, be careful right now. I'll be back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, so we're looking just at the Hong Kong ETF. I was asked about that. Yeah, this is acting well. It's actually up today, up 22 cents at 19.16, right on the 200-period moving average in the weekly. So how it handles it is going to be important, because it could get stuck here just for a moment, but so far it's done very, very nicely. Next question I got is, let me just quickly see this, FSLR, and I didn't even look down at my book to see all the other things. I want you to talk about Syntas, all these others. All right, I'll get to that maybe tomorrow. FSLR, quick. FSLR, there you are. Okay, this is First Solar is down sharply. So the one I was saying last week is that there will be money going to the solar stocks, I believe, but just right now, there's just too much. It's a hazard. It's down sharply. It's at -7, 151. Now, I can't remember if the questioner was short this last week. But yeah, short is the way to be right now at this moment. I would put a stop at 162 just for the moment. But yeah, so it's coming down. So look, yes, Syntas, This is the market. This is the economy. Doing nicely because only down $1.04 today, 225. But look at this. So this is what I wanted to show. This is like an instant restart. Technically, it's not, but I love this particular pattern because it seems to always want to go higher. So that's a D. But this, not with a new high, but just under it, goes A, E/B, G/C, and then you get to what? The D after an instant restart. This is fantastic in terms of a demonstration of Chapman methodology in terms of the instant restart. So we're watching this very closely because 228 was the high back in November, plunges down to the 180 level, and then it goes to what? 227. It's in the 227, 228 area right now. So is this a double top? There are just so many potential double tops. Break it to the upside is fantastic. Pull back here says, yeah, you can see a little bit of a time and maybe some price. In the meantime, we'll see what happens. Dow's down 171. I'm going to hand you over to Steve Rhodes. Should be a wonderful show as always. And thank you.